It would be probably the best if Curtis opens up with flying through whatever he brought, because he brought kind of like a summary of where we are and where he thinks we're going. So would you like to fly through it, Curtis?
Sure, sure. Okay. And then this is maybe a good intro for listeners that may not be up to date like
Yeah.
us. Not everyone checks the S&P price every 5 minutes like Dave and Sonny and I do. So a lot changed. Last week was quite tough for stocks. Um, and there was a lot of weakness and sell-offs, especially like Palantir sold off a lot, and some of the quantum stocks sold off. Um, and Bitcoin was looking weak as well. It went down to 99.5 or something. So last week was quite negative for risk assets. But the weekend was quite good, and it shows how quickly things changed. First, the latest data, and most of it leaning bullish. The Q3 US GDP is up to 4% at the Atlanta Fed. So it's been rising.
This is just a forecast. This is not an official information because we have the shutdown, so we couldn't get.
I don't know about that exactly, but in any case, it's rising, not falling. But let's see. In any case, corporate profits support the thesis that we're in a strong economy. So 85% of companies in Q3 in the US have beat their estimates. Total financial assets, money markets, we're going to get an update at the beginning of December. We're at about 7 trillion, but it looks like it's going to hit around 8 trillion US dollars is sitting there to be invested. This idea that we're in a demographic bull market in the US, I didn't really use this phrasing the last couple of years, even though I've been bullish, but I've heard this term more recently, the idea that simply the population in the US keeps rising, both from legitimate US citizens and immigrants, and that this is driving just more population drives up asset prices, bottom line, and it's inflationary. And so you can look at the US population, what's it at, 340, 350 million, and there's just a strong trend upwards that's driven asset prices just based on demographics. Also, the millennials are the what they're 30 to 45 years old, I think now, somewhere around there, 32 to 45, and it's the largest cohort. They're bigger than the boomers in terms of there's more millennials alive than boomers, and that drives what they call the big spending years. Buying a house, starting a family, buying a car, et cetera, et cetera, et cetera. So we have very strong demographic trends in the US. AI spending continues. We've talked about this before. 2 or 3 years ago, it was just a buzzword, but there's massive corporate spending. A lot of the money circling between the companies. So NVIDIA's spending with AMD and AMD's spending with Apple, and they're all sort of each other's customers, but it's still real money circulating. And that we have had news that returns on these investments are good. Microsoft came out and said their AI investment is giving them returns within 12 months, which is amazing. Usually CapEx spending doesn't come back. It's usually spread out over 5 to 10 years. So if you're getting your return on your investment back in a year, that's a crazy response. Moving quickly, rate cuts. We had a rate cut last week, was it? 10 days ago?
Yeah.
Uh, Powell's saying they might not cut in December, but I think it's like a 60% chance.
The chance that they will cut at the moment is estimate 69% chance that they
Yeah,
will, 25%,
yeah.
25 BPS.
To me, the real big thing that's looking bad is the jobs, which are important. But if we get weaker jobs, then that locks in the rate cuts. If we don't get weaker jobs, it's confirming the idea that the economy is fairly strong. So in a way, I'm bullish either way. What you don't want is a massive job loss scenario. I think we're at 4% or whatever on unemployment. But having a little bit of pain in the job market in a way is good because it's kind of a Goldilocks scenario, right? Because it indicates inflation will stay down, and as long as it's not a critical fall off, I think we continue in a bull market here. The AAII sentiment is released weekly. We're back to neutral. Last week was bearish. The week before was bullish. So it's sort of oscillating, but it's not in euphoria. It's not super bullish. It's somewhere in the middle there. You know, Warren Buffett retired today. Did you hear that?
No.
No,
He
I
just
haven't
sent
either
his
yet.
last report to his shareholders, and it might be the reason he has so much cash. It might be that was his ways to phase out and let his replacement come in and put his own mark on the business, or other reasons. I'm not sure, but in any case, people point to Burry and Buffett and say, well, look, these guys are really smart and they're bearish. But then you can count another 10 guys that are bullish that are smart also, like Paul Tudor Jones and Steve Eisman and other guys. So I don't think we should get fixated on just one or two people, as much as I respect them. If you pulled, the top 50 guys, it would probably be 50, half would be bullish, half would be bearish. So it's hard to go on that. So the next 6 weeks, in terms of seasonality, favor the Bulls. So I think Dave and Sonny both follow sentiment quite closely, and seasonality is part of that sentiment algorithm. And end of year, we usually get a run up, at least they call it the Santa Claus rally, or we get it early December or end of December. When November's weaker, there's more chance of December being stronger, and vice versa. So we have had some sell-offs, but overall, the reason end of year can be bullish, part of it is fund managers are trying to make their bonuses and catch up, and they don't make money being bearish for 3 or 4 months, right? They make money buying and selling, and they can't hit their targets unless they've got their clients in stocks and then selling into profits, right? And so the incentive for fund managers is to be in the market, not out of the market. But also, a lot of them are behind this year. I think something like 80% of fund managers are underperforming the S&P, which makes sense because it's been so rocky, right? So they get scared out, and their clients get scared, and they don't want to lose their clients, so they'll sell in like the tariff scare or other scares. So it kind of makes sense because we've had another plus 20% year in the S&P, and fund managers probably didn't think that would happen, and so they're underperforming. So what are they going to do at the end of the year if they're behind? They're going to go back into the market and try to make that up, or they lose their bonus, or they get fired, right? So there's an incentive for fund managers to always be in the market, or at least always get back into the market. And end of year is quite important for their end of year performance bonuses. So that's my take on that. What else? So we just had the Senate approve to go back to work for the government. And then I guess there's one more vote, but I think they've got that locked in. I'm not sure. Are we 100% going back? Do you guys know that?
Almost 100%. Is like 90+%. So you could say that
Yeah.
yes, we are.
Yeah. Inflation, I think we hit 3% last month, and I think we're going to go below it. I have a feeling we're going to go 2.9 or 2.8 because I think rents are finally falling, and rents were the big thing holding up for the last year or so. Rents have been holding up. I think they were 40% of the inflation or something. And so if those finally start to fall, remember, rents will have a lag because a lot of leases are only signed up every 2 years. And so there's a lag between sort of economic changes and job losses to then impact rents that get signed only after leases expire. Does that make sense? That's why there's some lead time, and rents will fall off at the end of a inflation cycle. There'll be a lagging indicator or a lagging metric. Does that make sense? So, although I've been hearing that for a while from Tom Lee, so maybe he's right finally on that one. But in any case, it does seem if rents fell last month, they're probably falling again because of that lag time I just mentioned. And that would bring us below 3%. Now, we know that 2% is the magical target of Powell, saying we want 2%. So going into 2 point something, I think may have a headline. It may affect sentiment that we dropped below 3%. What else? Yeah, even if jobs get weaker, this ensures more cuts. The market might like that if it's forward looking, right? So I think even if someone says, yeah, what about jobs? As long as it's not a complete disaster, it's actually could be bullish, ironically. Okay, my last point there is that it's interesting to me that we've been talking about recession for like 5 years we haven't had one, but we're selling off. Or we sold off a little bit. I think we're into this idea that people are afraid of not consolidating their profits so that the market may just get so profitable that people dump in the same way like a crypto coin just goes so high and then it sells off just because the people are just in such thin air of profits, they dump and then it causes a selling wave. I think a lot of people, including myself, are in profits we don't want to lose. And that's one reason I sold some Palantir last week. It was hard for me to sell. I sold some Bitcoin too, which was a 7-year hodl, which was really hard. And it's interesting because it was, I guess, I don't know, you can counter trade me because I'm usually bullish. So if Curtis is selling, maybe you guys should be buying.
I have
But
to say, note here, it's very honest of you and very open to that you actually are able to admit something like this and not hide from it.
this is more, I think, like I said in my tweet, I said, I'm not bearish. I'm just selling because Palantir is at like 18x for me. And I don't want that to fade away. It could drop in half any day, right? And so now I think I'm not the only one. I think a lot of people, Palantir is a good example because it's up, 15 to 20x for a lot of people. And those people are going to be trigger happy if we start to get, if things start to sell off. Palantir will sell off massively. Quantum stocks will sell off. Anything pre-revenue or highly overvalued could sell off. And so I think that's where the market is now. People are in profits, at least some people are, and that can people get scared. Oh, now's the time to sell now, and finally they capitulate. But it's not because of recession, okay? And that's maybe an interesting sort of curveball there. So, like I said, I sold off
Yes, you just
about 5% of my total portfolio. I sold some Palantir. I sold Cipher Mining. I regret I sold it like 18 and I think it went to 24 or something the next week. So you have regrets on either way. If you sell too soon and too late. So last time in 2021, I sold too late. So I guess I'll sell too soon this time. But I sold something called Sterling Infrastructure, which has been interesting because it's one of my non-text. They build roads and things like that. And it's been a big winner. Finally sold a bit of that, about a third of that, and then a little bit of BTC. And then I have call options. I'm sold call options, Palantir at 220. I set those up like a month ago, and I never thought it would go to 220, but it's at like 195 this morning. So we'll see if that hits. If that hits, then I'll be selling some more Palantir. And I've got Tesla December 19th at around 620. So I've got some Tesla for sale if someone wants to reach up and take that from me at 600, 620.
So you basically collected the premium and you are basically selling the covered calls?
Yeah, you're selling a covered call and
Okay.
like way out of the money. Like the Palantir 220, I wasn't getting a lot for it because I think what's called the delta is the probability that
Yes,
will
yes, yes.
happen. The delta was, they say you should do like a 20% delta is probably about right. I think it was at 8%, so way out of the money. And yet we're getting close to that. So that's quite interesting. And same, the Tesla at 620, I think is like a 5% delta. So the market's saying we're not going to get there by December 19th. If we do, I will release some Tesla. But
Okay.
so I'm not selling because I'm bearish, but rather I want to lock in profits.
Okay.
Now, Bitcoin, I did sell a bit when it was edging down to 100, but that's more of just a personal, like, lifestyle slash profit taking thing. But I am bullish. I still think we're going to hit all-time highs, and it could be by December. The fact is we have been above 100K for 190 days, and that is bullish in other estimates. It does seem like the OG Bitcoiners have been selling the whole year, and I didn't notice that so much. Most of it was bought by Micro Saylor, but the Bitcoiners with cost basis of like $1,000 or less have been selling a lot, and that's why the sell pressure's been so big for so long. So yeah, that's kind of where I'm at there.
Okay.
And then what about 2026? I'm not really looking at it that much just because I don't have that much time for it. If we get to 7,000 S&P by December and let's say Bitcoin's 150, I don't know how many people want to buy that, right? I know none of us do. Sonny laughs. I don't think Sonny wants to buy that, right? Even I don't want to buy that. So I think to talk about a bullish 2026, we would need a couple things to happen. I think we would need a pullback from those levels before we go higher. But also we need the US economy to keep growing. So we need low rate cuts. We need a Trump administration that's pumping the markets, and we need consolidation at those high levels. So,
Okay, how big of a pullback do you mean?
well, I don't know. And what I'm saying, enough to scare people to make going higher more attractive again, right? So 10 to 20%, but I have no idea. I'm an amateur. I have no idea. But my point is that would I buy S&P 7,000, 7,500? No. Would I buy Bitcoin at 150? No. And I think the smart money won't buy that. Okay, if you go to the Trump tweet. So, and it's funny because I didn't mention Trump in my initial notes, and then he surprised me again. So what he's saying here, he's talking about the tariffs. He's using very, very mature language, like calling people fools. So that the tariffs are not causing inflation, which seems true. I don't think they're faking that. Inflation is going down. And companies are profitable, which is true. So the tariffs were April, and now we're in November, and companies are beating estimates. So he's not lying about that. They've collected money, and he's giving $2,000 to most Americans. Well, no one saw this coming, but if you follow Trump, you should have expected this, right? That's a lot of money. I think the stimmy checks from COVID were only like $1,200. So that's a lot of money for your average person. And of course, it's literally money printing in a way. It's putting money directly into people's pockets. Is this the last time Trump's going to do this? No. Does he want to win the midterms in 2026? Yes. Does he want to be seen as someone who failed the US economy? No. And is he going to do anything he can to pump the US markets? Yes. And so you could call it the Trump put, right? The Powell put or the Fed put, meaning there's a buyer of last resort to support asset prices. I think you've got that with Trump. He's only going into his, second year? He's in his second year. He's got 2 more years, 2.5 more years. And they want to win the 2026 midterms. So all of this is saying, do you really want to bet against Trump and the US Fed that they're going to let stocks crash? You could. I don't think it's a good bet.
Thank you, Curtis, for this walking us through what you've brought.
Yeah, I would appreciate comments and pushback.
Yes. Let's see what Sonny also has to.
Okay.
Okay.
Bye.